We are in a stock market bubble. We have experienced economic turmoil as a result of the 2020 onset of the COVID pandemic. However, the herd mentality has also pushed stock market prices and values above their worth based on the system of stock valuation, causing a bubble. Consequently, there are certain considerations about the investing parameters and care that the investor must exercise. In this video, we'll provide an overview of the claims and cautions made by Jeremy Grantham, a prominent British investor, about the crash that will change a generation. Stay tuned till the end because our last point is truly inspiring. And make sure to subscribe and like the video so that you can learn how to achieve financial freedom. A stock market bubble is a type of economic bubble occurring on the stock exchange. In this bubble, participants place a higher value on equities than their market worth in accordance with the stock valuation method. This bubble is a consequence of groupthink and herd behavior. Typically, the bubbles are surprising and deceiving. They usually pass through 5 phases, allowing investors to anticipate them. This is the action taken by Jeremy Grantham. We will outline the key considerations about the current stock market bubble and impending disaster. The present stock market bubble is just the 4th super bubble in the history of the United States, according to Jeremy Grantham. He believes that a collapse is imminent, and he has suggested selling all US equities. The prominent investor even warned that no amount of Federal Reserve involvement could prevent the disaster. He has projected that the S&P 500 will plummet by a staggering 50%. In addition, we will discuss how you, as an investor, might cope with this foreseen disaster. We will instruct you on the procedures you may take to ensure your safety during your expected crash. Jeremy Grantham, a British investor, has captured the market's interest. He has done so by predicting a mega bubble in US equities. In an interview, the notable investor delivered a message that is difficult for detractors to accept. Following the imminent conclusion of the Goldilocks era of 25 years, Grantham predicted a reduced growth rate, inflation, and labour scarcity.
I do think we're in a bubble, but I also think it's unlike any other bubble.
If you think you can stand it for 10 or 20 or even 30 years, be my guest. But history says a lot of you will not stand it. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we are beginning to hit some of those boundaries, Jeremy Grantham says. Climate change is coming with heavy floods, serious droughts, and high temperatures. None of these make farming easier, so we're going to live in a world of bottlenecks and shortages and price spikes everywhere. According to Jeremy Grantham, in the quest of a greater quality of life and rapid money through the stock market, people have harmed their finances and the environment. As a result, wealthy disparity has reached an all-time high. Fragmentation of society and economic stress are having an impact. Jeremy Grantham explains why the current stock market bubble is distinct from prior bubbles, such as the South Sea bubble, the 1929 stock market crash, and the tech bubble. In the aforementioned stock market bubble, you simply project an extremely favorable economic scenario into the future. There are very large multiples of book sales and profits seen. You, as an investor, make the false assumption that the current excellent circumstances would continue indefinitely, which is not the case. The present stock market bubble is distinct and one of a kind in the sense that the current state of affairs is terrible. Obviously, extrapolating the existing circumstances will result in the exact opposite of a bubble. Therefore, the present bubble is exceptional.
We're in the highest 5% of PEs, and we're in the lowest 5% of economic conditions today. So there's never been anything like that in history.
Everyone is aware that COVID is the leading source of problems. The surge in the stock market is a result of the Federal Reserve, central banks, and government expenditure.
And it's global. So we have never had such a global agreement that every government is looking to spend and every government is looking for their central bank to accommodate.
Between the actual reality of production and employment and the paper world of PE ratios, there has been a true conflict. The prices have increased due to easy credit and cheap interest rates. There is an abundance of funds pouring towards those who can afford to purchase homes and invest in equities. Therefore, it is not practicable for small enterprises in the real world as it is for the stock market. This economy is as unique and odd as the novel virus. All these elements render the continued bubble as unclear.
My bet would be, of course, that reality will catch up with the high PEs.
It is well known that every bubble in history was preceded by insanity. When a bubble bursts, irrational behavior is noticed. The price increase is accelerating at a pace that is twice that of a typical bull market. Acceleration reveals the late stage of the bubble. Special purpose acquisition companies, known as SPACs, provide the function of not disclosing the purpose of the investor's money, but using it for a good purpose. It is a real echo of the South Sea bubble, says Grantham. Jeremy Grantham emphasizes that he does not mean to imply that SPACs will steal our money. Rather, he is implying by his remark that it is a genuine testament to the speculative nature. Grantham cites Tesla as an example of a company whose growth has slowed since the epidemic. Indicators of the bursting of the bubble, these tales were also prevalent in early 2000s and late 1999. These were also seen in Japan in 1929 before the bubble burst.
So I think this is an indicator, not a certainty, but a strong possibility that we are quite close to the bubble breaking in terms of psychology. Perhaps a matter of weeks or months, not years.
Despite the fact that the global economy remains sluggish, a sustained substantial government stimulus is required. According to his own statement, Jeremy Grantham modifies his prior claim that this time is different and substitutes it with a far more threatening 5 words. His comment shows that there is now no opportunity for lasting change. The certainties that we used to have no longer exist. He claims that value is no longer as effective a weapon as it was 70 years ago. Eventually, we will see a significant decline in the value of stocks. According to the nature of FANGs, Jeremy Grantham advises holding as few US stocks as possible. Jeremy Grantham recommends concentrating your stock market investments on developing countries and economies. These markets are at an all-time low relative to the United States and are relatively inexpensive. These economies include China, which according to World Bank forecasts will account for 30% of global growth over the next 2 decades. The second significant economy is India, which will also be a major participant in the region. The alternative may be Brazil. They represent a significantly larger proportion of the global GDP, thus you must prioritize them. Grantham says,
I think a bet on emerging markets is really betting the future against the past. And the only thing that makes life interesting outside emerging are the FANGs.
According to him, when FANG stocks rapidly increase by more than 10 times, they will become more intellectually intriguing than monetarily appealing.
And the reason I recommend not going short, shorting is a desperately difficult game.
As a short seller, you may not be able to tolerate discomfort, according to him. Jeremy Grantham's straightforward recommendation is to focus on developing markets.
My advice, really quite simple. You emphasize emerging markets, you de-emphasize the US. If you have to own the US, you go for deep value.
He asserts that circumstances were different 3 to 5 years ago. Even if he had to completely avoid the United States, he says he would.
You only need one big asset class, by the way, to get rich.
Emerging markets account for well over half of the global GDP and are expanding rapidly. Given the scale of these markets, growth is inevitable. Their growth rate will be far higher than that of the industrialized nations. They span around 26 nations and include every sector.
Why would you be moaning and groaning when you have such a good opportunity? It's 10 times earning. It's cheap. It's a great opportunity.
The United States has been exceptional, but things are deteriorating. According to Grantham, the statistics for life expectancy, morbidities, and social indicators are the lowest. Thus, these are some of the key comments stated by the famous investor Jeremy Grantham, on the imminent bursting of the present stock market bubble. If you like this video, be sure to hit that like button and subscribe to find out more ways you can become financially independent.